Hello everyone, welcome to this week's edition of the Fibonacci Review. Today we're looking at JP Morgan, the banking stock from the US. With regard to the Fibonacci retracement tool, I get a lot of traders asking where do you start it from, where do you end the tool, and particularly when the market's making higher tops, which is exactly what this stock has been doing. You can see new high, new high, new high, new high, new high, new high. And what we need to do is to just have a set of rules that we will apply under these circumstances. And what I do here is I look for a starting point. I'm going to assume, for example, that this area through here hasn't happened. And what we're looking at here is a significant low point, and the market's come up through here to make this high point November 25. Now, what I'm going to do is to go in, we're going to use the Fibonacci retracement tool. You'll notice here that it's created a triple bottom around 190. Now that to me suggests a very strong point for this particular stock. It means every time it comes down here, there's buyers wanting to pick it up. And then it comes back, and then it comes back, and then finally it really starts to move away from that level. So we can use that area around through there. And as we mentioned earlier, let's just assume that the top is in here, and now the market is putting in a little bit of a pullback. Now, one of the things that we can do, of course, is just move this across to the right-hand side. The other thing that I love to do in trading, and I think this is a really powerful exercise, is to have a look at where the runs start. And if you can figure out why the runs have started at that point, then you can replicate that particular strategy on any chart, any market. You'll notice here that the stock was trading at around $240, and within 2 weeks it's trading around $270. So it's had a very, very good run, up about 10% in about a fortnight. One of the things I noticed here was that this low was sitting on the 38.2% level between the bottom and the top. And there was also a double bottom low, or very close lows here at the 23.6% level. So from this top, we had a pullback of a Fibonacci ratio, came back and sat on it, and sat on another ratio, and then finally took off. And these are fabulous clues. What we're looking for is confirmation of the market reacting to these levels. And once it breaks through this swing top around 246.5, this market should, as a minimum, retest the previous top. And if it breaks through that, well, it's going to continue to rise. But the thing that I like to look for when I'm considering this as a top is what has it done in the past? So if I've got the Fibonacci tool from this low to this high, you can see that the 50% level here, or the halfway point, was a turning point. And the market reacted to that quite strongly here in October. So it means from this point to this point is repeated from this point to this point, and that's why that was a significant top, which then finally got good support on our Fibonacci ratios. So the tool is working nicely with the market movement, and that just means I've got some confidence in using these signals when I'm considering putting a position into the market. So I hope that makes sense. And of course, any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.